Okay, would you like to share the presentation with everybody, Adil, before we get started?
Yeah, I think I'm sharing. Can you see? No?
I can't.
Yes,
Okay.
I can.
Okay, great. Good afternoon and welcome to the webinar, everybody. How to detect and prevent fraud with real-time data-driven decisions. Great to see so many of you here this afternoon. Let's welcome our speakers today, SafePaaS Adil Khan, and we're excited to have certified fraud examiner Prashant Naik here with us as well as our guest speaker. So I'll hand it over to you, Adil, and you can get started.
Thank you, Emma, and thanks everybody for joining our educational series of monthly webinars. We try to pick a topic that is coming from you, our customers and partners, and so please keep sending us topics that interest you. So recently we have been looking at data sciences and building our platform around information risk management, as cybercrime continues to be a threat to our customers and our prospects. So this is really about a look from that perspective. Today's presentation. I'm really excited to have Prashant joining me. I spent some time with Prashant visiting with our clients in Middle East, specifically in Dubai. He's really an authorized, an expert in this area. So he's having some difficulty joining over the GoToMeeting, so I'll go ahead and do his introduction. And when he can join, Emma, just let me know so we can get him to kind of add his points. But Prashant's been kind of a leader in that space, especially in that market. He's worked for major audit firms, including the Big Four. Really understands the real estate market, leasing management, manufacturing, retail, and so forth, and a well-recognized leader in that region as well. Like I said, he's held several senior positions, and so he brings that depth and breadth of knowledge that you would expect somebody that's been in the trenches. So he's got some great insight that he's shared with us, which I'll talk through in a minute. And then hopefully he can join during this presentation where we can add his comments as well. And he'll definitely be available through Q&A. So just a bit about us. Most of you know us. We are in this space of governance, risk, and compliance, as it's known in many areas. But really our mission is to help companies reduce information risk, which is growing, whether it's fraud, whether it's financial statement risk, etc. We're excited to, be part of various organizations and thought leadership organizations like Oracle User Group, Gartner, and so forth. And so just some of our credentials. Oh, by the way, if you're in Europe, and this broadcast is mostly for the EMEA audience because it's 7 here in Dallas, 7 a.m. in Dallas. So we'll have a second one later today for the US, most of the US folks. But if you are in Europe, please come and visit us in ISACA Europe. We'll have some fantastic new announcements around GDPR, data protection, etc. So we're very excited about presenting and participating at that conference, ISACA conference in Europe, in Geneva. It's in Switzerland, October 16th through 18th. Just some of our clients, some of you know them, know some of them, and again, they're across different world regions on 5 continents, various challenges around information risk, as well as different industries. So feel free to reach out to us at the end of the presentation, or anytime ask us a question. If you have a pain point, chances are we have seen something similar, although each customer is unique. We just want to make sure that we give you the opportunity to share our experiences and best practices, having done that for a long time. Just about our platform, I won't spend a lot of time on it right now. We'll come back to it when we talk about the actual solution. But this platform is basically designed to improve controls in your business information systems and help you conduct your commerce better on our platform. It includes audit risk and compliance, access controls, continuous controls monitoring, and you can read from bottom up all those items like predictive analytics and so forth. So let's start by looking at examining what's changed in fraud. Fraud's been there, since the beginning of business, but what is happening as a result of cybercrime? So we found this study that PwC did recently, as early as last year, and how fraud is impacting us is through the automation. As we're becoming more and more open, global, and connected, you're seeing the trends in fraud move to the platforms that are open, connected, and global. So for example, if I just move from top left to right and then bottom left to right, you can read those pretty easily yourself, hopefully. You can see the screens really well. But 49% of the organizations across the world are claiming to be affected by financial fraud, which is up from 36% last year, right? So that's a significant jump. From 36 to 49, as you can see. And if you read the papers, it probably is not as surprising, right? Because you hear about data losses, you hear about data privacy attacks, different types of methods that are being used to conduct cybercrime in organizations. The next stat is 64% of the survey that was conducted by PwC identify that the disruption of fraud could reach as high as $1 million, right? So, just recent stories here. It's not just affecting businesses, affecting individuals. It's affecting, institutions. For example, there's a number of states in the U.S. where there's been ransomware placed into their county system. These are poor, low-budget counties that don't have a significant amount of IT budget, and so they are being targeted by cyber criminals to lock down their systems and ask for a ransom. So there are different methods and procedures that are being used to infiltrate systems. And this crime is growing, as you can see. The other thing that's disturbing to me is that bottom left, 52% of fraud is actually coming from the inside. And given that everybody, all well-run companies, are implementing these strong ERP systems and good accounting systems and have strong policies, so, despite of all, and they have good auditors in place, despite of all that, the 52% number seems pretty high as compared to previous years that I've seen similar surveys from various, groups and organizations, specifically around the Fraud Association. So I think these are some of the challenges that, and the last one, of course, on the right at the bottom, respondents suffered fraud indicated experience cybercrime. So again, just validating the importance of cybercrime. So today's workshop is more about, not just general fraud, because that's broader. There's collusion. There's many other factors. So we won't be able to boil the ocean in 1 hour. But we definitely want to hit some highlights on how you can protect your systems and information in those systems, especially from the cybercrime.
Yes, Adil.
Hi. Welcome, Prashant. Good to have you join.
Hi, Adil.
You're just fine now.
Yeah, excellent. And you're absolutely right, Adil. And to add to what you said, the other thing that happens is the fact that the fraud will always exist till such time the processes involve humans as part of the entire workflow, and as long as that element of the human exists, there always will the inherent risk of fraud will always remain within the company and within the process. And I think that is why it is important to evaluate various systems controls to try to detect fraud on a timely basis. So that is another area which I thought, yeah.
Good observation, absolutely. So with that, I would like to turn over the next slide to you. This is a study that we reviewed from JP Morgan, and kind of takes us to the next level, focusing on the fraud that's happening online.
Yeah. So to add to this, and taking on from the dawn of the cyberspace and the increase in social media and the dependence of social media, there are a lot of areas where now companies are being exposed to fraud risk. And I would like to share one particular risk that happened in my past organization, where it's called as a whaling attack. And typically, what happens in this particular case is the cyber criminals target somebody like the CEO or the CFO, and they try to let him unknowingly give up some of his personal information, either about himself or about his company, and by which they are able to hack into his system. So the fraudster basically tries to send the CEO, the CFO, emails which look very legit, and they hope that these guys will open the attachments, and that's how they will install their malwares through the Trojan that they have placed within the emails. So
wow.
this particular thing happened actually, and we were unaware of this. I mean, to be honest,
Right.
we are completely unaware of this. And there was an instance where the CFO one day receives an email from the CEO, and he says, the CEO says to the CFO saying that, look, we have got this contract, we have placed this contract, and before you you issue the advance payment, make sure you change the bank account to this bank account which is attached below.
Oh,
and
my
I've
goodness.
received this from the MD of the supplier, of the contractor. Now the CFO takes his time. It's about 2 hours that he delays the instruction, effecting the instruction. And after 2 hours, he gets another email from the CEO, okay, in the same tone that the CEO talks to the CFO. So the CFO is not suspecting anything as yet, saying that why haven't you changed the details, and please send the remittance immediately. Now this is where the CFO, because he was a little aware of the various fraud risks within the organization, he reached out to the internal audit department and spoke to us. At the same time, he also spoke to the CEO, saying that, why are you pressuring me? And that is when we realized that the CEO had never written that email.
My goodness.
So the CEO's entire emails were actually compromised, and the CEO was actually it was a phishing, whereby it looked as if the CEO is writing the email. However, the cyber criminal was writing the email to the CFO. Now, it is very important, at this stage, to bring about the fact that at the senior levels, at the top levels of board, and also the CEO and the CFO, we have to ensure that as an organization, we set proper guidelines, social media guidelines. We set proper procedures by which the personal information, and this is personal information to the individual, to the CEO and CFO, where they don't tend to share it with people whom they do not know. They should only share it with people who are their friends. Okay, they should share sensitive information, to people whom they are in contact with, and that is that awareness, in my opinion, which is so important for the organization to ensure that this is communicated to all the CEOs and the CFOs. And I'm sure later in the session we will be discussing how we will use this technology to detect fraud risks and prevent fraud risks from actually happening. So this is the age of cybercrime today, and the risks seem to be really serious in terms of what can happen when our systems are hacked in this interconnected world that we are now operating in.
Yeah, no, that's definitely the stories we hear, and you certainly brought this to the real world experience that we had just introduced you, saying that you bring that to the table. I think this is an example of where Prashant can help your organizations create that awareness and bring those best practices with his own hands-on experience on dealing with these situations. So thank you for sharing that story with us, Prashant. we'll continue talking further a little bit more about. I'd like to hear from you about some best practices, so like how do companies, manage fraud, or some of the things you just mentioned. If you can roll that into, okay, so these are the problems, but what are some of the reasons why people commit fraud, what to look for, as you said, creating that awareness. I think that'd be useful for our folks here on the call.
Yeah, sure. So in my opinion, Adil, one of the rare things that management does not do or internal audit does not do is the fraud risk assessment. And typically, I would contribute two aspects for this situation. One, typically the culture in the organization is such that the word fraud is a taboo to speak out. So you don't utter the word fraud, within a premise of the organization. Now it becomes uncomfortable to everybody in the room when the word fraud is spoken. Now allegations or suspicious activities, those are words which can be spoken to some extent, but however, fraud is something like a taboo. Right. Now, because the organization is not willing to address the fraud risk or accept that fraud is a given in the organization, because you see, fraud cannot be eliminated in any circumstance. Today we might say that we will bring in the best of the internal controls, we will bring in the best of the systems. However, the people who are operating the systems, people who are in the organization, would find their ways in and around that control system that we have established to basically carry out the fraud. The second thing that comes to my mind, and I think which is important, is the oversight role that the audit committee plays is also not very effective when it comes to discussing fraud at the board and discussing the controls. So typically, for me, when I've been in the audit committee meetings, and we used to have one slot in probably 2 or 3 audit committee meetings to discuss the update on frauds. So what typically would happen is that the oversight that we should have and the focus that audit committee should have on the fraud risk is downplayed in a lot of extent, to a large extent. So it is important now. I think the role then falls to the internal audit department and the risk management department, that the fraud risk assessments are done regularly, and it is brought to the attention of management, that we need to perform this, especially when there are major changes that have happened to either the process or to the people or to the structure or to systems or technology systems that have been implemented recently in the organization. So whenever such changes happen, immediately the fraud risk assessment has to happen. And then what you look at is basically evaluate the controls, evaluate the effectiveness of these controls, and then say whether these are effective to detect the red flags that would happen on a day-to-day operating basis. And then the next step would be to sit and deliberate with management. Now, this is another area which I would say needs to worked upon, is to deliberate on the remedial actions to mitigate this risk, and then assign that accountability. So management has to take that accountability to implement those risk mitigation steps. So now this is a part of the management responsibility. Now come to the internal audit responsibility. Internal audit responsibility is it is important for internal audit to ensure that in the internal audit planning phase, we should include fraud risk auditing as part of the audit universe. And you cannot go out and say that we are auditing now for fraud. You cannot say that. But what you do is, in the critical processes that you have listed out in your audit universe, you embed those fraud risk tests within the organization, within the audit program. And that fraud risk test then will highlight any fraud risks that are open or not mitigated. So that way you identify the red flags on a timely basis. So in my opinion, past experience, and I'm sure a lot of studies have been made, the ACFE also has a little bit of details on this. that these red flags typically are identified through internal audit, through external audit, through implementing a robust code of conduct within the organization. And again, this brings me back to the point of building a culture in the organization. And the code of conduct implementing a code of conduct is the best way to basically ensure that the culture is built, ethical culture is built in the organization. And the other thing that comes to mind is the whistleblowing hotline.
Yeah.
So having a very effective whistleblowing hotline is an important tool for management to implement, so that if there are risks that are identified, or if red flags are identified, the person who's identifying the red flag can actually blow the whistle on a timely basis, rather than getting scared of being marginalized or discriminated in the organization.
Right.
He basically has an avenue to come up and inform that there is something that could be a potential risk for the business. So those are the things, in my opinion, Adil, would be areas where best practices could be implemented by the organization.
Great insight again, Prashant, on some of these high-level points. I'm sure the devil is in the details, as they say, because there is $1 trillion plus. Fraud has been increasing consistently over the years. So there's certainly fraud happening in organizations, but it is a difficult challenge to solve for various reasons that you identified eloquently here about whether it's cultural, whether it's just afraid, just not wanting to rock the boat. We expect to work with people that are ethical and have a lot of integrity, and we expect that from our colleagues. But the fact is, fraud is happening. And if you don't have a good program in place, you can see the type of challenges you can end up with. So, prevention is better than finding out after it occurs. It's also a reputational risk for many of our client organizations. So tell us a little bit more about what causes people to actually conduct this fraud, because from being in the audit world, it just doesn't seem like it's something that one should even attempt. I mean, you have a job, you're inside an organization. Why would somebody commit fraud? What are some of the reasons? This is an interesting slide.
Yeah. So it's a very interesting concept. So I would say, why would somebody commit fraud is basically one word: a human greed. So as a human being, one of our inherent vulnerabilities is that we have greed, and greed presents itself in different forms and faces. And as long as if you look at the fraud triangle that we have, there has to be an opportunity, there has to be a pressure on the person to basically deliver, and there has to be a rationalization for why I do what I do.
Right.
So when all these three ingredients come together, the fraud would normally happen. And I'll share one small example.
Sure.
Yeah. There was a time, and I'm sure that today also is a time, where management and boards are asking of management to do more with less. And when they say do more with less, typically the first thing that gets impacted is people. And management go through downsizing. Now, when they go through downsizing, and if they are not strongly equipped with technology, when the people go, they take the controls with them, and then there are no further compensating controls to basically do what these people were doing in the process. And hence, when layoffs happen, when people leave, the control would basically cease to be performed. And when control ceases to be performed, opportunity presents itself. Now, opportunity has presented itself. People are less. I have that pressure to deliver my results, but I'm not getting appropriate resources to deliver. And pressure builds upon me as a management functional head to deliver on my remit and my KPIs.
Right.
So the moment that happens, now I'm sitting looking at this opportunity, and I'm looking at this pressure on me, And then I rationalize that, look, I have to do what I have to do exactly for the thing that you said just a while ago. That's the job. And I need to keep my job to basically deliver on what the company has asked me to deliver.
Yeah.
So all things fall in place exactly the way it intended to, and fraud would then basically take its form. Even though we would be in our best of intent saying that, well, I'm of the cadre where I don't commit fraud. But when pressure comes, when opportunity presents itself, you basically rationalize yourself, and then you come to a place where you basically are in a situation where you are now down the slippery slope. So that's basically what happens, in my opinion. This is one of the classic examples. I mean, we could have more discussions.
It's interesting for companies to consider looking at that even more strongly as the growth cycles in many economies are slowing down right now, and the pressure is increasing on management to produce the results. Even if the top line is not growing, you still need to deliver the bottom line results. And so I can see that this would be something that companies would want to look at more closely in times when the growth cycles are slowing down. And while there is no recession major, for example, here in US, but there's always talk of, that the cycle is running out. So whether it's 1 year out, 2 year out, but it'd be better for companies to start planning, as you suggested previously, including some of the fraud risk as part of their normal audits now, rather than wait after it's too late. So timing may be critical. This seems like a very timely advice from you, Prashant. So tell us a little bit about some of the controls. I think some of these things you've mentioned in a couple of slides ago. So this may be a recap of what you've said, but if you could tell us a little bit more in depth of what type of controls would you recommend companies consider?
Okay, so to basically fight fraud, I would say one of the best mechanisms to do that is companies should work towards creating an anti-fraud control program, whereby it's a comprehensive program which is established basically with the intent to reduce the occurrence of fraud. So it provides enough guidance and detail to basically deal with the fraud when it occurs. So that's the fraud framework. Now, what should also happen is that it should become applicable to all employees in the company, and it should then make sure that, I would rather put it all employees, suppliers, and customers. Yeah. So in a way, it should cover all the stakeholders. And to add to this, I would say it should cover enough understanding of what fraud would comprise of in our organization. Okay, relevant to our organization, because each organization is different. Fraud can happen in different ways. So the anti-fraud program should basically bring about those understanding of how the fraud can happen in the company. The other thing that I would say is the company should take some time, the board should take some time to define its tolerance to fraud. So it should basically sit down and look at what would be my tolerance when it comes to looking at what level of fraud is acceptable to the organization. And then once that is defined, what is the other step we need to work on is what is the role each one of us will play. What will the board play as a role? What will be the senior management's role? What will be the employees' role? And what will be the regulators and stakeholders' role? So these are the various participants or players in the process of fighting fraud. And then each one should know within the concept of the 3 lines of defense that we normally talk in the internal audit world. Yeah. Each one should know where they sit in, the first liners, the second liners, and the third liners. Right. So each one should know what is their role, and appreciation of that 3 lines of defense is very important, because it's not the internal auditor's role or the external auditor's role to identify fraud. It is the management's role first to identify fraud and take appropriate action. So this basically then achieves the objective of preventing fraud, detecting fraud, and then responding to fraud. So this entire fraud framework aspect, fraud control program aspect, would then be built within the organization either through internal audit or through a separate anti-fraud department or cell, and they could build that training and build that awareness within the organization to send out that message that we are against or combating fraud as per the policy that is laid out from the board and from the management. So that basically would be the way in which we can actually fight fraud and implement those right controls in place to basically avoid and detect fraud timely basis.
Excellent. Okay, so this is a good overall set of steps for a company that is interested in maturing their fraud management. Now let's take a look at so this is, I think, a repeat of the previous slide. Let's move on to this procure to pay area, because this is how the cash leaves the company in most cases. So let's drill down into a process that's probably audited the most for fraud. Give us some ideas. These points are excellent, but if you could just talk from your experience on, how do we go around improving the controls in your procure to pay process?
So typically on the procure to pay process, I would believe technology controls would be the best to prevent it. And as long as technology controls are in place, what would happen is the majority of the decisions that the procurement department takes would be in line with the process. Brings to my mind two things, two areas, which even after having the right technology controls, procurement as a department has an inherent risk of conflict of interest, which I would say people know about conflict of interest. People understand the conflict of interest, and at many a times I have seen them disclose their conflict of interest. Now, what happens in the procurement phase per se is that when the procurement officer goes through the purchasing process, he or she realizes that there is a conflict, okay, but they do not disclose their conflict at that stage, at that point in time. And the whole process goes through. The internal audit department comes to realize the conflict that existed subsequent to the event. And when you try to investigate that conflict of interest, it typically comes out that I forgot about it, or I did not think this was the conflict. I misunderstood what the conflict of interest meaning was. This is my wife's company, or this is my sister's company, or my brother's company. This is not my company, so I'm not really conflicted. However, they fail to realize that they were a part of the decision making. They were a part of the influence, and they were able to influence that decision. So that is one area which I think is an area which needs to be awareness needs to be built around conflict of interest, and make sure that they understand how conflict of interest is to be avoided in many times. Yeah. So that was one bit, and I would say, yeah. So
okay.
So that is what.
Okay, so let's now switch gears a bit and talk a little bit about how technology can help you streamline some of these great best practices that we have just heard from someone that's in the field, rolled up his sleeves and helped companies organize and prevent fraud. So what we help companies do at SafePaaS is help you improve those controls. We work with companies that already have good awareness around fraud, as Prashant said, so they're already interested in, they have the sponsorship from the audit committee, they do have the right folks, but they just want to make sure they can streamline this and make it part of doing business. In other words, they want to prevent fraud and just embed those controls in their systems. And today, most of those systems consist of what we call ERP today, right? The enterprise applications that run our procure to pay process, order to cash process, record to all these processes that are really significant and have an impact on your financial statements and your bank accounts and all that good stuff. So the question is, well, why do you need these additional controls? Because you've bought a really good ERP system. It has users and roles and security capability. It has approval methodologies through workflows, three-way match type configuration controls built in, et cetera, et cetera. So why are they not preventing fraud? Why is there so much fraud still occurring? As a result of companies investing millions in most cases on these really modern systems? And the answer is that people find ways around these systems. So for example, even though the companies have good roles, capability to write roles like procurement manager, like Prashant just pointed to as an example, it's possible that procurement manager can go in and also have access to change the bank accounts or change the payment process to his or her own account, right? And the example of a sophisticated CFO that had the right sense to go and ask the CEO before he did anything, is a good one. But the opposite of that is that if somebody does have access to bank accounts and they can wire the funds, that could create a segregation of duty, which can lead to fraud. So being able to identify those potential risk is not part of your ERP system, and that's where SafePaaS comes in. So we provide you that ability to identify and prevent any kind of segregation of duty conflicts, which can lead to duplicate payments or even materialized risk. Same thing with discounts on the order to cash cycle. So if you have discount policies and you have somebody that's violating that policy by discounting it below or different for some personal benefit. Another example that Prashant presented, you can see that we can catch that type of information through the discount and make sure there's approvals on any special discounts that are offered on the order to cash. It's like another example in procure to pay specifically that comes to mind, and almost all of our clients ask for this control. It's called split purchase orders. So ERP system has the ability to protect you that if the purchase order is over your approval authorization limit, it doesn't let you approve it, right? So let's say your approval authorization is $5,000 for miscellaneous purchases over a month. What you can do is these ERP systems can allow you to send multiple POs the last day of the month that are below 5,000. So you can send three POs for 4,500, for example, and they'll all get approved because they're below but the combination is not captured by the ERP systems. So these are some examples. There's also duplicate vendors where somebody enters a vendor with the wrong information. And there's master data changes, like frequent changes to customer or employee or supplier bank accounts, changes to the approval itself, and then fuzzy logic. So even though the ERP system is great at avoiding duplicate records, like you cannot enter the same invoice 1,000 with the same amount on the same day, it will flag that as an error or a duplicate, but you can put a $sign after that and let it force that approval. So this is where SafePaaS comes in. We provide the platform that secures the information necessary to run your business with preventing fraud, right? So this is a practical example of how we do it through a data-driven decision. So in this example, a company identifies a risk that says that we don't want to pay. The business risk we identified is incorrect vendor payments. So we do not want to make incorrect vendor payments. And we set up a control objective. So valid invoice order. So one of the points that I picked up on Prashant's experience is that when companies are downsizing, the manual controls leave with the company control owners. So that control is now exposed, creating that opportunity for fraud. But if you implement that control objective and embed that into your procure to pay, like this example, then the control remains in the system, whether the person operating the control is in place or not, and we let the system automate that control for you. So what happens is when you put that control in your ERP system through SafePaaS, that whenever there's a invoice comes in that looks like a duplicate payment, we will flag it. So whether it's an incorrect vendor payment, whether it's a valid invoice, invalid invoice, or order, or duplicate invoice, or payment, we will flag that as an incident. And then with our capabilities through data-driven decisions, because now we're analyzing this data continuously in your ERP system, for example, the Oracle e-business suite, which is popular, I know, in many of the markets we serve, and I've got a couple of examples of that later in the slide deck. So that'll generate an incident that you can identify and send route to multiple people for review and approval. It's possible it's a false positive, right? Because there may be a valid reason why you're making two payments to the same supplier on the same day. Maybe it's a way to manage cash flow. Maybe it's a way to comply with a contractual settlement, etc. So it is possible. So you can do that. But in the meantime, we can also go and put that ERP transaction on payment hold, so that once you identify these red flags in the transaction in the procure to pay cycle, and you can say we're covering all of the cycles, right? So there's quite a few more types of controls. We can go and put this on hold. I've got an example of a case study later on to show you how that's done. I'll throw in another example. The state of Pennsylvania saved $30 million in the first year by implementing this solution. So there's a high ROI on it as well, not just because of fraud, but also because of other errors that occur in procure to pay cycle. So this is how you implement a data-driven decision versus decisions that are made purely from a manual review, and you can see this is real time, right?
Right.
Now, what we're really excited about at SafePaaS is adding the AI and machine learning capabilities to our tools. And what that's helping us do is find these hidden layers and connections between users with access to sensitive data, functional access to key ability to perform key functions like payments, to suppliers, linking multiple data sources together. For example, your HR system, which has your employee bank accounts, let's say, and your ERP system that has your supplier bank accounts, looking for similarities where an employee bank account may be the same as a supplier bank account. Using that example that, again, Prashant offered, where some relative of yours, your wife, your friend has a bank account, and they're a supplier, and you forgot to disclose that, or just it was a fraudulent attempt to steal funds from the company. So those kinds of things are now possible with the latest technology that we're adding to our solutions, SafePaaS solutions, around what we call Monitor Pass technology. And so that's going to help us find these hidden layers and identify even more issues that are humanly not possible to identify, but just by looking at a report, aging report, or something like that, right? So that's the idea of finding hidden layers. And what that does for you, it discovers these kinds of duplicates, invoices, where some invoices entered two different ways. It came in through the batch process that ran, but also it was manually entered. It could even be an innocent mistake, right? Where we have a EDI interface with the Abbott Labs, and they send us these invoices, but they also mailed us an invoice. I, in fact, had a story where a company went through a merger and they received two invoices from SAP. There were two CIOs. They hadn't decided which CIO would be the final one. So they both did the right thing from their perspective and paid the invoice. And later on, they found out that that they had actually duplicate paid it. In this case, bona fide supplier like SAP, after this investigation, was able to refund. But you can see that in some cases, that money, once it leaves the company, is very hard to get back. So how do we find these types of risks? So we have what we call Safe Insight, which provides the advanced analytics to companies and our partners like Prashant, where they can go into organizations and really look at various data sources. Like the ERP system would have some schema around database. They also have change records. User events are happening. If we look at APIs, how the data is flowing into the company, what's the security model, how their data groups are set up. So we call that a data source. And within that data source, Prashant and his team can help you basically set a set of rules based on his experience. We also provide a catalog of best practices that you can leverage. So for example, Prashant and I are working on an opportunity right now where a company wants to look at their procure to pay cycle. So we picked out 4 or 5 controls for them, some of the ones that I've identified in the previous slides. So we pull those items out, and we get quick access to business bottlenecks and risks. It's not always about fraud risk, it's also sometimes about inefficiencies that are also costly. So we look for opportunities to improve the process as well. And then we let our data probe tool go and discover, apply those rules into the ERP system, like the fuzzy logic, like the duplicate payments. And it can use dynamic charts and graphs to identify the relationships and quickly and intuitively identify the data that constitutes suspicious transactions. And then, people with experience and certifications like the ones Prashant brings to the table can help you test and apply different algorithms. There's some standard fraud test algorithms, including Benford analysis, mean analysis, and so forth. So folks that have expertise in this area can really consult with you, or if you have in-house expertise, you can augment that as well. And so they can quantify risk, help you expect what your treatment plan should be. So, as Prashant said again, there are different levels of tolerance for risk, including fraud risk. So that's mandated by the board. For example, for your petty cash, if it's $100, you're probably not going to spend $1,000 trying to investigate a $100 petty cash account. So that's the type of risk analysis that the experts can provide you. And then optimizing the process itself. So there may be areas where you can embed more controls, you can remove bottlenecks, which are costing time and effort and losses. So any inefficiencies we identify as a result of the analysis, we can help you optimize the process as well. So it's not just about fraud risk, it's also about running your business better, faster, cheaper to compete and win in the market. And then we provide quantitative measures that augment your experts like Prashant that provide more qualitative assessment with his experience. So now your findings and your action plan to improve fraud risk and prevent that is based on both qualitative and quantitative measures. And one of the things I've learned working in the region where Prashant is based, for example, Dubai, is that there are large organizations with lots of silos where there are different perspectives. For example, an IT shared service center might think the problem with the situation is that business doesn't understand the technology. Technology guys are told that they don't understand business, and so there's sometimes things just slip through the crack. So by giving everybody the same sheet of music, as I say, you're now all on the same page. So that enables you to have a common set of KPIs that brings the whole enterprise together in this mission to combat fraud. And then to really get to a solution, we have simulation capabilities. For example, if you have to go rebuild your roles to reduce the risk of some role assigned to somebody in procurement, just picking on that same example that we discussed earlier, you could simulate a role that shows that if we took away the payment option from procurement role, how would that impact that role? And would the risk go down, for example, for potential duplicate payments to a supplier, et cetera? So that kind of simulation is done within our platform, and that saves a ton of time. It's a nice little handy tool to have to simulate your new process, optimized process, to see and get buy-in from the decision makers. So when you roll out that updated process, you're doing minimal impact on the organization and maximizing the benefits of having a risk management solution. So that's basically the capabilities that Safe Insight Advanced Analytics brings to you to help you, kind of jumpstart your fraud management process and make it sustainable. So it's not a one-off project. It's really a process that you bring to the organization. And the way this works is we have over the years built a ton of controls. Let me just put it in basic terms. So you have 300 plus rules around access management, like entering journal, posting journal, creating suppliers, paying their invoices or creating their invoices, customers and credit and so forth. So this is just a sample of hundreds of rules we have built. that make up, in the background, I've got segregation of duty matrix, a typical matrix. So if there is that risk occurring in your organization, chances are we can find that within 24 hours of getting access to the data and taking a snapshot, running it through the rule sets. So it gives you really powerful analytics with very little internal resource requirements or impact on the organization, and provides you the visibility to make a business case and really understand your maturity level based on real data, again, data-driven decisions. Another area that our customers often ask us to look at is how their systems are configured, because systems change because technology changes. So right now there's a big trend to the cloud. We just did a presentation on risk-free cloud transformations. If you like what you're hearing here, take a look at on our resource site. There's a recording of all the webinars there as well. So, these are some of the concerns customers are bringing to us. Hey, we're thinking about cloud. We see the benefits, but we're concerned about, what's going to happen to all these systems we have on premise. Who's going to control all these controls we have built into these systems because we can't customize the cloud and so forth. So this enables you to really, again, download 500 plus rules that protect your key processes. Like in the background, you see a document that a customer would typically put together for setting up a general ledger configuration. And what you're seeing in the table there is the ability to track those key configurations in SafePaaS through our rules repository to make sure that if journal authorization limit, as an example, is changed, in other words, somebody's given unlimited access to approved journals, or default, which is in Oracle, is infinity, essentially, it's gazillion dollar, more than trillion. So, you probably don't want to have that default setting. So we'll catch all that and help you transform into the cloud or whatever your next, whether it's a simple upgrade, we'll help you catch that and make sure you prevent any errors and mistakes or fraud, for example, that could cause, transactions to occur that should have been prevented. So configuration is a key element of any ERP system, and that's how you rely on your financial statements and information you get from the ERP. So having those secured and monitored is really critical, and we provide you a big catalog of those controls that are tested. Okay, now if you have poor access and you just haven't had time to fix your access and your configurations are risky and we identify the risk, then chances are you're going to end up with this third layer, which is the actual transactions. So this is materialized risk. So we didn't have good access controls in place. In other words, we had people that could create suppliers, pay suppliers, and then we didn't have good authorization controls on approvals because we upgraded our system. So that's not hopeless. We still have a third level, the third leg or third line of defense, which is actually looking at the transactions themselves. So being able to look at, any payments that are made over the thresholds, for example, invoice that is outside your threshold for the PO approval on a three-way match. Did we pay somebody an invoice where we received goods that were below the PO by 10%? Let's say your limit or tolerance is 5%. So those kinds of transactions that slip through the cracks. Did we change the exchange rates? Did we make an error on our foreign exchange rates where we added Brazil or Argentina, where the currencies right now are fluctuating significantly? Did that impact our financial statement and balance sheet? So we help you at each level, and this gives you that single kind of truth, a singular truth that you can all get together across those silos and say, okay, now we're on the same page. Let's attack the problem as opposed to attack each other in the silos, right? So it's a productive exercise, and it's quick to do. Within a week or so, you can have some of these results. Next, I'm just going to talk about a quick case study. I know we're running out of time, actually, so I apologize, but I thought the insight was really good. So what I'll do is just mention the company, and then please get the details of how we do it online. So the company that I picked out of our few hundred customers that we have is the one I worked with in New York that is in a financial services industry. And one of the reasons I picked this example is because companies generally in insurance and financial services have really good fraud controls. in place. Also, they have they run their system on the procure-to-pay system on Oracle eBusiness Suite, and they've added some cloud more recently. So we've had a 10+ years relationship and have the opportunity to work with them in New York, and I spent some time with them at their offices there. So they basically went through a transaction configuration and access controls review with us, and came out where we were able to help them improve their results of monitoring and detecting suspicious transaction by 40%, and then prevent 100% of those using the capabilities I talked about. The way we did that is by providing them, looking at what they already had in place. So effective application audit planning requires. So these are some examples of what we did for them: detecting user and have unauthorized access, compensating controls as needed, remediation efforts, provisioning process, improving the provisioning process with looking at real time. So these are some of the fraud protection controls that we implemented in the system. So it's more than just policies and procedures. The company already had. The good news, they had a lot of these procedures in place, but we helped them streamline them using SafePaaS data analytics capabilities that I talked about. And this is what it looks like. Of course, this is not their data. I just put in some sample data to how they use it. And so this is an example of the latest version of our continuous controls monitoring. You can see on the left, there's a number of monitors you can deploy it, like duplicate invoice, duplicate vendors. And these are quickly deployed. It's literally click and, point and click. And the way you do that is because we have done all the heavy lifting and we have all the objects pre-built for you. And we also guarantee that if there isn't an object built, we'll build it at no charge. So that's a unique guarantee that only we offer, I believe, in the world, which makes it gives you the confidence that you will always have 100% coverage on anything you want to cover in your key processes, right? So this is a mixed example of configuration controls, transaction controls, and change controls like supplier bank account changes. Which is critical to, and the results you get are something like this. So you can get nice visuals, which can help you, sometimes pictures of 1,000 words, and this is very true in this case. So you can see the risks and share them across the enterprise and come together on a single page. So you can see which users have the highest risk, which responsibilities, how is our analysis reducing the risk? So the efforts we're putting in, how are they progressing and how are they reducing the risk? It's a simple application to set up. We have data source called Data Probe, which connects into your, in this case example, an ERP system. And once that connection established, a secure connection established, you can deploy these objects. So you can deploy a supplier object. Again, this is the hard work of, Oracle has, for example, 10,000 tables now with 30,000 functions. So we have done all the heavy lifting for you. You don't have to go write your own SQL queries. You don't have to know how the Oracle table structure works. And we've done the same, by the way, for all the other ERP systems where the world's information resides, essentially. That's our mission. And then we can go in and give you the ability to provide change tracking, different levels of changes that occur. People can be assigned, as I mentioned previously, that will receive alerts or workflow approvals. So we can hold people accountable to take action, as again, Prashant's advised us. So these changes, like the changes that are made, risk, for example, somebody goes and changes an invoice setup in your ERP system and allows somebody to adjust, you can catch that and prevent that from happening by showing them a message. And then this request comes in and they can review or approve it and reject it. And you get an incident report of every action that's taken. So you have a full audit trail that folks like Prashant can come in and help you identify. So just wanted to fast forward. I know we're a few minutes late, but Prashant, really appreciate you joining, and thanks everybody on the phone that was able to attend. Emma, could you mind asking one? We don't have time for questions, unfortunately, but I would like you to maybe ask one question, and then please, we should probably ask the rest of the questions through our LinkedIn site, which would encourage everybody to join. Go ahead, Emma.
Yes, sure. Most companies have a zero tolerance policy for fraud. However, sometimes the fraud amount could be considered immaterial, and investing resources to investigate the transaction would be just considered not the best use of resources. So in such a case, what should be the management's view, and what should the internal audit view be when it comes to advising the board on defining tolerances for fraud?
So, Adil, can I take this?
Yeah, Prashant, please go ahead.
Okay. So, so I would say that to answer this question, you have to look at the results of the fraud risk assessment, and also from the perspective of what the internal control environment is in the organization. So these are the two inputs that either the management and internal audit both together could bring to the table at the board. And yeah, the best conservative approach would be to say zero tolerance. But as Adil was mentioning a little while ago, it's not right to invest $1,000 resource to look at $100 petty cash fraud, and hence it is the board and the ARC's decision to then consider the best use of the available resources and to ensure that our focus, the organization's focus is on the high fraud risks. So I would always say keep the eye on the risk and not on the material amount. So as long as the eye is on the risk, okay, I think the decision that the management and the internal audit department and the board would take would be in the right ballpark.
Excellent. So Emma, thanks for coordinating our webinar today. Can you wrap it up and then we'll post it? And Prashant, again, great attending. Thanks for attending and your insight today.
Thank you.
Yes. Thanks, Adil. Thanks, Prashant. A big thank you to you for joining us today. You can find further information on how we can help your organization combat fraud on our website. You can also follow us on LinkedIn and Twitter for updates. So please feel free to reach out to myself, Emma, if you do wish to set up a demo with us and wish to see how SafePaaS can help you. So thank you and have a great day. Thank you and bye-bye.